Hey everyone, welcome back to Corporate Decoder, the place where we unravel the financial mysteries that big corporations try to hide in plain sight. And today we're diving deep into Data Storage Corporation's latest filing a report that suggests a few big moves they've been making behind the scenes. So, what is the big deal with this filing? Well, it looks like Data Storage Corporation, or DTSD as it is known on the stock market, has been busy buying back its own stock. We're talking about a significant chunk of shares being repurchased, and that usually means a few things. It can signal that management believes the stock is undervalued, or it could be part of a strategy to boost earnings per S-share. Let's dig into the numbers to see what story they're really telling us. First off, let's talk about the shares themselves. DTST has common stock and also warrants that allow people to buy that common stock. The stock itself is traded on the Nasdaq Capital Market, which is a pretty well-known exchange. This tells us these are publicly traded securities, meaning a lot of eyes are on them. Now, the most interesting part of this report lands on the 15th of January 2026. On this date, the company announced it had bought back a whopping 5625029 shares of its own common stock. That is a lot of shares coming off the market. They spent a hefty $29,250,670.8 to do it. So, what does this mean for those who still own shares? After this big buyback, the company is left with only about 21,67038 shares still out there. That is a significant reduction in the total number of shares available, and it leaves them with around $10 million in cash. This stock buyback strategy can often make the remaining shares more valuable because the company's profits are now spread across fewer shares. But who is selling these shares to the company? The report gives us a peek into the dealings of the company's own directors and officers. On the 14th of January 2026, the day before the public announcement, several key people at Data Storage Corporation decided to sell their shares back to the company. We see figures like Thomas Kempster selling 881,472 shares, Charles Peluso selling 865,841 shares, and Harold Schwartz selling 815,876 shares. It seems like a significant number of insiders were participating in this offer, which could be interpreted in a few ways. It might mean they believe the buyback price was favourable, or perhaps they are exiting some of their positions. We also see Matthew Grover selling 43,340 shares, Lawrence Maglione with 24,752, Uwayne Mitchell and Nancy Stallone both with 11,248 shares each. John Argent sold 57,207 shares, and Clifford Stein tendered 280,850 shares. Todd Carell is the only one listed who did not sell any shares. This broad participation from the leadership team definitely paints a picture of a company making a strategic financial move. The report also mentions that a press release attached as Exhibit 99.1 provides more details. While we can't go over every single detail of that press release here, the core message is clear: the company conducted a substantial share repurchase. This kind of action is often designed to boost shareholder value and signal confidence in the company's future prospect. And of course, as with any SEC filing, there is a cover page with interactive data. This is standard practice, allowing for easier analysis of the reported information by financial professionals. So, what is the takeaway from this particular filing? Data Storage Corporation, DTSD, has essentially gone on a significant stock buying spree, reducing the number of shares out in the market substantially. They spent nearly $30 million to do it, leaving them with about $10 million in cash. The fact that their directors and officers were also major sellers in this process is noteworthy. It suggests a well-timed move, either to take advantage of what management sees as a good price for their stock, or perhaps to strategically manage their capital structure. Looking at this, the company seems to be in a phase of consolidating its ownership and potentially trying to increase the value for its remaining shareholders by reducing the float. The remaining cash of around $10 million is not a huge war chest, especially considering past expenditures, so future growth initiatives will need to be carefully managed. One key risk here is that if the company doesn't have strong future growth prospects, a buyback can artificially inflate earnings per S-share without addressing underlying business challenges. The broad participation of insiders selling shares could also be a concern if it signals a lack of confidence in future growth, though it could just as easily mean they felt the buyback price was a great opportunity. We'll have to keep a close eye on their future filings to see if this buyback translates into sustained value or if it was more of a financial maneuver. Alright, that is our breakdown of Data Storage Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this stock buyback is a smart move? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description to join our community. Thanks for watching. See you next time.